everybody, Steve here. Today I'm going to talk about a REDFIN article and what they're talking about in terms of the boomtowns. And we're actually in the area very close by Cape Coral, Northport, some of the boomtowns where a lot of people are rushing in and buying real estate. And now talking about how these areas are drastically slowing down. And toward the end of this article, I want to talk about a one-liner that they threw in here, basically kind of all the doom and gloom, and then they throw this in there saying how unlikely that a crash would take place in these boomtown markets based on income. So let's dive into this article real quick. Home buyers' income soared in pandemic boomtowns like Boise, Austin, and parts of Florida, largely due to remote workers moving in from pricey job centers. Housing markets in many of those places are now slowing down. The typical Boise home buyer earned $98,000 in 2021, up 24.1% from 2019. Boise is followed by several other pandemic-fueled migration hotspots: Austin, and multiple Florida metros, Cape Coral, Northport, West Palm Beach, and Miami. Phoenix, Stockton, Tacoma, Washington, and Salt Lake City. Income growth was more than double the nationwide average of 6.8% in all of those places. The top 10 metros where home buyers' income grew most during the pandemic, we can take a look here in terms of the median price home growth. But just take a look at this. Cape Coral, where we're at, 48%. Northport, which is just north of Cape Coral, 47%. By the way, we had a lot of people coming from the Midwest, like Illinois, to these areas just buying up real estate. And you have to understand, people that are going into Boise and Texas and some of these metros in Florida, they're coming from out of state, other areas. So those areas that they're coming from, in most cases, they're very expensive, and these are higher net worth individuals as well. So when they come into an area like Cape Coral and they could get at the time a canal front single family home, Gulf access for say $400,000, they're like, damn, this is cheap. So they jumped all over it, which is causing a surge of property values just blowing up in these areas, unfortunately. And it has a devastating effect to the locals in these areas because their wages are not near the wages of, you know, somebody coming from Chicago, for example. So it really had some disruption. But let's take a look at these valuations. Median home price growth December 2019 to December 2021. Boise, Idaho, 53%. Austin, Texas, 48%. Cape Coral, Florida, 48%. Northport, 47%. Phoenix, Arizona, 48%. Tacoma, Washington, 39%. Salt Lake City, Utah, 41%. The outsized income increases in all those places are due largely to relocating remote workers with high hometown salaries. An influx of people moving in also intensified competition for limited supply of homes, making it so high-income local buyers were most likely to successfully compete with out-of-towners. Affluent out-of-towners have contributed to rapidly rising home prices in many of those metros, pricing out many local buyers with lower incomes. For white-collar workers earning high salaries, remote work is such a huge financial boon. It enables them to move from a tech center to a more affordable part of the country. It can have the opposite effect on locals in those destinations, especially renters who are watching from the sidelines as home prices skyrocket while their income stays mostly the same. Home prices shot up twice as fast as home buyer incomes in Boise, rising 53% to $485,000 from December 2019 to December 2021. Prices rose 48% in both Austin and Cape Coral. Home price growth outpaced home buyer income growth in all 10 metros on this list, with prices rising more than 30% throughout the pandemic in each one. Price growth slowed to about 11% year over year in June in both Boise and Austin as the housing market cools. And finally, Boise, Austin, Cape Coral, Northport, Phoenix, and Tacoma are among the 20 housing markets that cooled fastest in the first half of 2022. And Boise, Cape Coral, Northport, West Palm Beach, Miami, Stockton, and Salt Lake are among the 25 housing markets most susceptible to home price declines if the U.S. enters a recession. But, and this is where it gets interesting, because they just said if the U.S. enters a recession, these 25 housing markets are going to be negatively affected. But even though they are susceptible to a recession-driven downturn, these places are unlikely to see housing market crashes precisely because home buyers there have relatively high incomes. Now, I can't tell if they're contradicting themselves in the same exact paragraph, but I think that there's other things to consider going into recession. I believe that we're going to see more and more layoffs, and this is even going to be for white-collar layoffs as well. So a lot of these affluent people might be positioned to sell these properties. I tend to believe that a lot of these purchases were actually second homes as well. So they wanted to get out of certain cities, certain states, and go to more free states as well, and cheaper states. And I believe that when we start to see layoffs, the first thing it's going to go are second homes. And obviously mortgage rates are taking a toll on any purchaser out there right now as well, because the prices of homes are still elevated tremendously. But if we look in these areas, for example, like Cape Coral and Northport, where I have full access and data to these MLSs, yes, there is still a shortage of inventory, but the inventory that is on market is sitting for a longer period of time, and there are tremendous amounts of price reductions as well as properties coming back on market. So I believe in the fall, we're actually going to start to see an actual evidence of properties showing sold comps, showing less than previous sold comps. So it's going to actually show a decline in property values. And unfortunately, people that bought at the top of the market, if they do have to sell for a job loss or relocation or whatever the case is, or some of these people, are selling second homes, unfortunately, I think a lot of them are going to be underwater, and maybe the more affluent can cut a check at closing, but people that maybe put a 3.5% or 5% down, don't have a whole lot of money in the bank, might be more in trouble and could be underwater here in the near future. So anyway, let me know your thoughts on this article. As always, I will leave the link in the description below for you guys, and I'll see you guys on the next video. Thanks for being here.